Are you unsure whether to invest in bonds or stocks as you approach retirement? It's a question many Australians face, and today, we're going to break down everything you need to know to make the best decision for your financial future. Imagine you're about to retire, and you've worked hard to build your savings. You've heard stories of retirees who've lost money in the stock market and others who swear by their investments. You might be feeling overwhelmed, wondering whether you should play it safe with bonds or take a risk on stocks for potentially higher returns. Well, you're not alone. Let's start with some basic definitions. Stocks are essentially shares of ownership in a company. When you buy a stock, you become a partial owner and can benefit from the company's growth. On the other hand, bonds are essentially loans you give to a company or government. When you buy a bond, you receive regular interest payments and get your initial investment back at maturity. So, which is better for you as a retiree? It depends on your personal situation, your financial goals, and your risk tolerance. Here's a simple way to think about it. Stocks are like a thrilling roller coaster ride, exciting with the potential for big gains, but also some scary drops. Bonds, however, are like a leisurely train ride, more stable and predictable, but with less potential for high returns. Now, let's dive into some practical advice. First, consider your time horizon. If you're retiring soon or are already retired, you might prefer the stability of bonds. They can provide a steady income, which can be crucial when you're no longer working. On the flip side, if you're several years away from retirement, investing in stocks could give your money more time to grow, potentially increasing your nest egg for when you do retire. Here's a straightforward strategy to think about. Consider a balanced portfolio. A mix of stocks and bonds can help you capture growth while minimizing risk. For example, you might allocate a percentage of your investments to stocks for growth and a portion to bonds for stability. A common rule of thumb is to subtract your age from 100 to find the percentage of your portfolio that should be in stocks. So, if you're 60, you might aim for 40% stocks and 60% bonds. Next, let's talk about emotional appeal and the pain points many retirees face. A common fear is outliving your savings. This concern is valid, and it's why having a balanced approach can be comforting. By investing in a mix of assets, you can create a portfolio that aims to provide both growth and income. It's also essential to keep an eye on fees. High fees can eat away at your returns, whether you're investing in stocks or bonds. Look for low-cost index funds or ETFs, which can give you exposure to both asset classes without breaking the bank. Visualizing your investments can also be helpful. Imagine your portfolio as a garden. If you plant only one type of flower, like stocks, your garden could bloom beautifully but also risk a harsh winter. By planting a variety of flowers, both stocks and bonds, you create a more resilient garden that can thrive in different conditions. Now, let's recap some actionable steps. Here are 3 things you can do today to better understand your investment options. 1. Assess your risk tolerance. Take a moment to think about how comfortable you are with market fluctuations. Are you okay with the ups and downs of the stock market, or would you prefer the steadiness of bonds? 2. Review your current portfolio. Look at where your investments are currently allocated. Do you have too much in one area? Consider rebalancing to create a more balanced approach. 3. Consult a financial advisor. If you're feeling unsure, talking to a professional can provide clarity and help you craft a personalized investment strategy. Before we wrap up, I want to hear from you. Have you already started thinking about your investment strategy for retirement? Drop a comment below and share your thoughts. And if you found this video helpful, be sure to subscribe for more valuable retirement tips every week. In our next video, we'll tackle another critical question. How can you maximize your pension payments in retirement? You won't want to miss it. Remember, planning for retirement doesn't have to be daunting. With the right information and guidance, you can create a secure financial future. Thanks for watching.